It's trick or treat time, the perfect time to talk monsters. So join me, won't you, for an exploration into the monstrous Liz Warren idea of the so-called wealth tax. Hi everyone, I'm Gardner Goldsmith for MRC-TV, and there's nothing more enjoyable at trick-or-treat time than a good horror story. And that's what we get when studying the scary monster of the wealth tax from Massachusetts Democrat Senator Liz Warren.
Look, we've been doing a wealth tax forever. Anybody in this room own a home? Yeah. Or grow up in a house, right? That somebody owned the home? Yeah. That you've been paying a wealth tax all those years. They just called it a property tax.
That's the one she wants to give life to, so let's take a look at her envy-based idea that caters to the thievery-minded in America. First of all, Warren wants to impose a 2% annual tax on households worth more than $50 million and a 1% surtax on households that have net worth calculated at $1 billion or more. And of course, since most of us don't have nest eggs that large, well, it's gotta be absolutely fine, of course. Those folks have more than we do, and that's just not fair. And they can afford what we tell them they can afford because Liz says that's completely okay. We have better uses for it after all. And we work with the government, so their property is clearly our property.
What I'm proposing is for the top 0.1%, that is for folks who have more than $50 million in assets, that their property tax include not just the real estate, which is no longer the biggest asset, but that it also includes the stock portfolio, the diamonds, the Rembrandt, and the yacht.
And of course, Fall Huntus assuages any guilt we might feel over our covetous acquisitiveness by implying in a never-ending tirade of eruptions that, yes, those who have more simply don't deserve to have it. Pay no attention to any vestigial link you might have to fundamental ethics. It's all for the best, as she tweeted in January. The rich and powerful run Washington. Here's one benefit they wrote for themselves. After making a killing from the economy they've rigged, they don't pay taxes on that accumulated wealth. It's a system that's rigged for the top, if I ever saw one. Because, you know, by being rich, however one defines that on the ever-sliding scale of jealousy, you clearly didn't earn it. You're automatically powerful in DC, and you only benefit yourself. Forget the fact that you already paid high taxes on the earnings before you saved and invested the rest that became this accumulated wealth. Those would be taxes used to pay Liz Warren's salary and fund, along with massive debt instruments, her dazzling array of all sorts of pork and regulations that stifle innovation and, yes, drive American businesses overseas. It would make the ultra-rich pay their fair share and generate nearly $3 trillion over the next 10 years. A lot of rich and powerful people won't like it, but I don't work for them. Sign our petition if you agree. It's time to tax the wealth of the top 0.1%. Well, Liz, since you're so animated about fairness, let's see who pays the bulk of federal taxes. As the National Taxpayers Union Foundation reports from the data collected in 2017 from the IRS, the top 10% of earners bore responsibility for 70% of all income taxes paid, up slightly from 2016, while half of all tax filers paid 97% of all income tax revenue. Indicating the degree of progressivity in the code, the bottom 50% of earners took home 11% of total nationwide income, while owing 3% of all income taxes. Additionally, there's Warren's blithe assumption that her vampiric wealth tax will suck out $3 trillion in 10 years, as she claims. Well, here's how economics works, Liz. You see, humans change their behavior to avoid pain and conflict. They'll expend extra effort to avoid greater threats to their well-being and their living standards, the very things that people work to improve. Now, when you threaten them with government-perpetrated theft, they will expend energy and earnings to avoid your predation, which is what happened in Sweden and why that government dropped its so-called wealth tax a decade ago. See, Liz, instead of investing in new U.S. companies and R&D, those people who are threatened by your tax will send their cash outside the U.S. They will put it into trusts and nonprofit organizations, and they will no longer put them into savings accounts. And so your wealth tax will drive current wealth away, stifling investment to create new wealth that could be created by the investment from these people.
Some countries made the mistake of saying wealth held here in country. Well, guess what really rich people do? They put the yacht somewhere else, right? They move the cash somewhere else. Nope. This one says wherever held.
Then, of course, there's the calculation problem, as Peter Suderman explains in Reason. As the National Tax Foundation's Nicole Kading and Kyle Pomerleau note, the very rich, quote, own more than publicly traded stock, such as real estate holdings, trusts, and business ownership interests. It is difficult to value these assets on an ongoing basis. Imagine a large, privately held company. Its value could change almost daily. How would the tax handle these fluctuations? And then there's the constitutional problem. Aside from the income tax, which required a constitutional amendment before it could be implemented, the Constitution prohibits the federal government from levying direct taxes, taxes that aren't spread out amongst the states according to population. Some proponents of the estate tax have argued that it could pass constitutional muster, but opinions are split, and there's probably more reason than not to believe that it would be struck down. When estate taxes were challenged, for example, they were upheld as taxes on the transfer of wealth rather than its existence. That wouldn't be true in this case. Warren's wealth tax would target fortunes simply for existing, which, as Suderman speculates, might be the point. Warren's act is pure, monstrous class envy, coming from the woman who coined the phrase, "You didn't build that," months before Barack Obama employed it, to imply that business owners are somehow parasitic off of the wonderful and glorious infrastructure that the government gives us.
You built a great fortune in America. Good for you. You had a great idea. You rode it all the way. You worked late at night. You built a great fortune. That's great. But I guarantee if you built that fortune here in America, you built it at least in part using workers all of us help pay to educate. You built it at least in part getting your goods to market on roads and bridges all of us help pay to build. You built it at least in part protected by police and firefighters. All of us help pay the salaries for. And we're glad to do it.
But never drawing out the logic to ask the next fundamental question. Where does the government get that money to build its crumbling, mismanaged infrastructure? Oh yeah, that's right. It gets it off of the productive capacity of supposedly free individuals by sucking it away through taxation, borrowing, and then taxing the next generation. Liz, wake up and stop trying to give us these fairy stories. Your stories are actually very, very scary. They've been tried before all around the world and they have failed. Stop trying to employ class envy on people, and why don't you try something else? Maybe two things: peace and following the Constitution. Those are some interesting concepts that maybe you haven't heard about. Thanks so much for joining us, everybody. Enjoy the trick-or-treating wherever you might be, and hopefully we won't get these kinds of tricks anymore from politicians like Liz Warren. For MRC-TV, I'm Gardner Goldsmith.